The sky is falling, the market's crashing, tariffs are coming, government shutdowns, interest rates, crypto's dead, tech's doomed, everyone panic. Or not. You know what I'm doing while everyone's losing their minds? I'm buying, aggressively and excitedly, like a kid in a candy store having a fire sale. Today, I'm breaking down 5 stocks I'm loading up on right now. TAO, ASTS, Meta, Uber, and Shop. And why all this doom and gloom nonsense is actually creating the buying opportunity of the decade. We're talking AI revolutions, space internet, undervalued tech giants, and businesses everyone uses but nobody appreciates. Let's go make some money while everyone else is hiding under their desks. All right, real talk, I get it. The headlines are terrifying. Market meltdown, economic collapse, crypto winter. Turn on any financial news channel and it's like watching a horror movie where the monsters are tariffs and interest rates. But here's the thing nobody's telling you. The best time to buy is when everyone else is selling, period. End of story. That's not motivational poster nonsense. That's how fortunes are built. James Altucher, the former hedge fund manager who called Bitcoin at $114, calls 2026 the great game, a convergence of economic forces that creates generational wealth opportunities. He's not alone. Ray Blanco at Technology Profits Confidential is bullish on emerging tech. Smart money isn't panicking. Smart money is positioning. Let me address the big fears directly. Tariffs? Yeah, they might happen. You know what else happened during every tariff scare in history? Markets overreacted, then recovered, then hit new highs. Tariffs create short-term noise, not long-term destruction. Government shutdowns? We've had how many of these? 22 since 1976. And you know what the S&P 500 did after every single one? Eventually went up because businesses keep operating, people keep buying stuff, and the economy keeps growing regardless of which politicians are mad at each other. Interest rates? The Fed's been playing this game for years. Rates go up, markets freak out, rates stabilize, markets recover. Rates go down, markets celebrate. This isn't new, this is the cycle, and cycles create opportunities. Stocks and crypto crashing? Listen, I've lived through 2007 bankruptcy, the 2008 crash, COVID-19 meltdown, and every this time is different panic in between. And you know what I learned? It's never different. Fear creates discounts. Discounts create wealth. That's the game. And my buddy James, he's a 70-year-old physicist, thinks in decades. He told me once, JD, the market's job is to transfer money from the impatient to the patient. And you know what? He's absolutely right. So while everyone's panicking, I'm shopping. Here are my top 5 buys. Stock number 1, TAO, Bittensor, the AI revolution nobody's talking about. Current price, $230 to $450 range. AI plus blockchain, decentralized machine learning. And let's start with the wild card that could be the biggest winner on this list, Bittensor, ticker TAO. TAO is what happens when you combine artificial intelligence with blockchain and create a decentralized marketplace for machine learning. Think of it as an Airbnb of AI. Instead of renting out your spare room, you're renting out your computing power and getting paid in TAO tokens. Here's why this is massive. AI is the biggest technological shift since the internet, right? Everyone agrees on that. But all the AI right now is controlled by big tech, OpenAI, Google, Meta. Bittensor says, what if we decentralize that? What if anyone anywhere could contribute to AI development and get rewarded? And the market's starting to notice. TAO just went through its first halving in December 2025, exactly like Bitcoin halvings, cutting daily supply by 50%. In Economics 101, when supply goes down and demand stays the same or increases, prices go up. And analysts at some major firms are predicting TAO could hit $1,000 to $2,700 by 2030. And some are even more bullish. Now, is that guaranteed? Of course not. This is crypto meets AI. It's volatile as hell, but the potential, absolutely insane. Plot twist about TAO, my buddy Mateo, he's 28, computer engineer, deep into the tech space. He showed me Bittensor 6 months ago, and I thought that sounds complicated. Then I actually researched and realized this could be to AI what Bitcoin was to money, a complete paradigm shift. The risk? TAO is speculative, it's volatile. It could drop 30% next week, but that's exactly why I'm buying now while everyone's scared of crypto. Fear creates the best entry points. Drop a comment. What's the craziest high-risk, high-reward investment you ever made that actually paid off? I'll go first. I bought Tesla stock in 2019 when everyone said Elon was crazy and they were going bankrupt. Turned out pretty well. Let me know down in the comments. Stock number 2, ASTS, SpaceMobile. The space internet is coming. Current price, $20 to $30 range. Satellite to phone connectivity. First mover advantage. Stock number 2 is SpaceMobile. Ticker ASTS, and this one's straight out of science fiction. ASTS is building satellites that let your regular smartphone connect directly to space. No special equipment, no Starlink dish, just your normal phone, getting service anywhere on Earth, on oceans, mountains, deserts, wherever. It's like Starlink, but for phones. And they've already got partnerships with AT&T, Verizon, and Vodafone. And they launched their first commercial satellites in 2024. They are literally making space-based call service real right now. Here's why I'm bullish. There are 5 billion people on Earth with smartphones. Billions of them have terrible or zero coverage. The ASTS could literally connect the entire planet. The addressable market is insane. And get this, they're first movers. Nobody else is doing direct satellite to normal phone service at scale. SpaceX Starlink does internet. ASTS does phone calls and texts directly to your iPhone or Android. Different markets, different tech. And here's the reality check. My buddy Eric, he's 51, works in tech, super pragmatic. He said, JD, ASTS is either going to 10x or go to 0. And you know what? He's probably right. This is a binary bet. Either they succeed and become worth billions, or they fail and it's ugly. But the upside, astronomical. The partnerships are real. The technology works. The demand is obvious. I'm willing to bet on that. And the risk? This is a space company with a still unproven business model. It's expensive. It's complex. Things could go wrong. And that's why you don't bet the farm on it. But a reasonable position? Absolutely. And stock number 3, Meta Platforms, the unloved tech giant. Current price, $500 to $600 range. Facebook, Instagram, WhatsApp, AI-driven growth. Stock number 3, Meta. Yeah, Facebook, Instagram, WhatsApp, the company everyone loves to hate but can't stop using. Here's what the haters are missing. Meta is printing money. They're doing 150 plus billion in annual revenue. They have 3 plus billion daily active users across their platforms. Their AI advertising is getting smarter every quarter, and they're trading at like 20 to 25x earnings, which for a tech giant with that growth is cheap. Plus, they're going all in on AI. Mark Zuckerberg is spending billions on AI infrastructure, llama models, AI ad targeting, AI content creation. And while everyone's focused on OpenAI and Google, Meta's building an AI empire that directly makes them money through better ads. And let's talk. Reality Labs, the metaverse division everyone's mocks, yeah, they're losing billions on it. But you know what else lost billions before it worked? Amazon Web Services, Tesla for years, and these things take time. Zuckerberg's playing a 10-year game while everyone's freaking out about quarterly losses. But here's what really matters. My buddy Will, he's 60, digital marketer, been in the ad space forever. He told me, JD, Meta's ad platform is the best in the world. Nothing else comes close. And as long as businesses need customers, Meta prints money. And he's absolutely right. When everyone hates a stock that's fundamentally strong, that's when you buy. Contrarian investing 101. The real talk. Meta could drop 20% tomorrow if Zuckerberg says something weird. But over 3 to 5 years, this company's going to be worth way more than today. Bank on it. And the risk? Regulatory pressure, competition from TikTok, metaverse spending. But the core business, ads on Facebook and Instagram, is a money printer, and that's not going away. Stock number 4, Uber. Everyone uses it. Nobody appreciates it. The current price, $60 to $80 range. Ride sharing plus delivery plus freight. Path to profitability. Stock number 4 is Uber, and I'm willing to bet you've used it in the last month. Uber's not just ride sharing anymore. They've got Uber Eats, which is massive, Uber Freight, trucking logistics, Uber for Business. They're in mobility, logistics, and delivery. And here's the kicker. They're finally becoming consistently profitable. And for years, Uber burned cash trying to grow. Now, they're generating free cash flow. The business model works, margins are improving, and they dominate in most major markets worldwide. Plus, autonomous vehicles are coming, and when self-driving cars actually happen, and they will, Uber's the obvious platform to deploy them on. And they already have the infrastructure, the users, and the demand. They just plug in the robo-taxis and margins explode. And think about it. How often do you not use Uber or Uber Eats? And I'm in Texas. I Uber Eats lunch probably twice a week. I Uber when I don't want to drive. And they're embedded in daily life for millions of people. That's the moat. Here's the deal. My buddy Alan, he's 80, super successful dude, has seen everything. He said, JD, the best investments are boring businesses everyone uses. And Uber's everywhere. And that's power. And once again, he's right. When a company everyone uses starts making consistent profits, that's when the stock takes off. And Uber's at the inflection point now. And the risk, competition, Lyft, DoorDash, regulatory issues, labor costs, but Uber's scale is their advantage. They're the biggest, and in platform businesses, biggest usually wins. Stock number 5, Shopify, e-commerce backbone. And the current price, $80 to $110 range. E-commerce platform, 2 million plus merchants. Last but not least, Shopify, ticker SHOP. If you've bought anything online from an independent store in the last 5 years, there's a good chance it was powered by Shopify. They're the infrastructure behind millions of online businesses, from tiny startups to billion-dollar brands. And here's why I'm bullish. E-commerce isn't going away. If anything, it's accelerating. Every business needs an online presence. Shopify makes that easy. They are the picks and shovels play for the entire e-commerce gold rush. And they've been smart. They cut costs, focused on profitability, and their free cash flow is surging. After years of growth at all costs, they're now growth with profits. That's the sweet spot. Plus, they're expanding into B2B, point of sale systems, logistics, payments. They're not just a website builder anymore. They're a full commerce operating system. Plot twist about Shopify, you know how many businesses shut down during COVID and realized, oh crap, we need online sales. Shopify powered that transition for millions of businesses. They basically became essential infrastructure for modern commerce. My friend Anish, he's a computer engineer running his own business. He told me Shopify is AWS for e-commerce. Once you're on the platform, you don't leave it. The switching costs are too high. And exactly, that's the stickiness that creates long-term value. The risk, competition from Amazon, economic slowdowns affecting merchant sales, valuation concerns, but the long-term trend toward online commerce is undeniable, and Shopify is the leader. All right, so here's the deal. You can focus on the noise, tariffs, shutdowns, rate fears, or you can focus on the signal. The signal is this. Number one, AI is transforming everything. TAO is positioned for that revolution. Number two, technology keeps advancing. ASTS is building the future of connectivity. Number three, strong businesses keep making money. Meta, Uber, Shop are cash-generating machines. Number four, innovation doesn't stop. The best companies adapt and thrive. And number five, fear creates opportunity. When everyone's selling, that's when you buy. James Altucher talks about wealth cycles converging. Ray Blanco focuses on breakthrough technologies. The smart analysts aren't panicking. They're positioning for what comes next. And here's what comes next. The people who bought during the fear make money when confidence returns. That's how it always works. Look, I'm not saying these stocks can't go down. They absolutely can. Short term, anything can happen. But over 3 to 5 years, I genuinely believe each of these companies will be worth significantly more than today. Here's your action plan. Don't panic, don't sell everything, and don't hide in cash earning nothing. And be strategic. Maybe you take 10 to 20% of your portfolio and allocate it to high conviction growth plays like these 5. You dollar cost average in over a few months. You ignore the daily noise. You focus on the 3 to 5 year outlook. And most importantly, you stop letting fear make your investment decisions. Fear is expensive. Patient is profitable. Look, I get it. It's scary out there. The headlines are designed to terrify you. And that's how they get clicks. But terror doesn't build wealth. Conviction does. Strategy does. Patience does. So while everyone else is panicking about the sky falling, I'm buying TAO, ASTS, Meta, Uber, and Shop because I genuinely believe these businesses will be worth more in 2026, 2027, and beyond. And am I right? We'll see. That's the game, but I'd rather bet on innovation, technology, and companies solving real problems than bet on fear and hiding cash. And if you want to learn more about personal finance, check out my other video about dividend ETFs. Now, go do your own research and decide what you believe. In future, you will thank you for not panicking during the discount sale. And peace be with you, and may your portfolio grow while everyone else's shrinks because they got scared.